Hello and welcome back to my channel, Thai Adventure and Investment. First of all, I want to say Happy New Year because this is my first video in 2026. Today I'm going to discuss about general stock market condition and one particular stock. Before I begin, I just want to say that I'm not a financial advisor and you should consult a financial advisor if you want to invest in stocks because stock trading is inherently risky and you may incur losses. So let's look at the SPY, which is S&P 500 index. In the last 3 months or so, the SPY has been relatively choppy. It has been going up and down. It was sitting around 696 a couple of days ago. It went up to 696 and then it came down and it's currently at 68. Now, there may be various reasons why this is happening. One of the reasons could be there is some liquidity crunch. There could be margin calls because a lot of investors they borrow money on margin, they buy stocks and crypto, and they may be forced to liquidate. But what about the larger picture? What happens if you look at the next 2 years or 3 years? I'm hopeful that the market is going to continue with its bull run. Maybe there may be a crash. I'm not sure. I'm not saying that there will be a crash, but there may be a crash because we cannot predict the future. So you have to be prepared about everything. Currently, what is happening in the market is that everyone feels that the AI trade has been overdone, and they feel that the AI trade has been manipulated, and there is a concern that big companies are spending well beyond their cash flows, and that is not going to be sustainable, which is why you keep seeing that big names such as Nvidia, AMD, Google, and other big stocks going down, even though they have very good earnings. So as you can see from this chart, SPY has been relatively choppy for the last 3 months. It keeps going up, keeps going down, again goes up, and goes down. And that's basically because every time it goes down, many investors come in, purchase the stocks, moves it to a high, and then when they find that they have sufficient profits, they're selling it off so that the stock prices go down. And why I am, keeping aside some money to purchase Amazon stock. Uh, Full disclosure, I do have a small position in Amazon stock, and in fact, last Friday I bought a small position. And if the stock crashes, maybe 30%, I don't know. I'm not saying that it's going to do that, but it might happen. So I have kept money separately so that if it does happen, I can purchase more. And as you can see from this chart, Amazon did go up. It touched about around 250, and now it's trading around 198. And I feel that the stock is now undervalued, although they posted very, very good earnings and results. The stock went down because they predicted expanded capital expenditures on AI, and that is why the stock went down because the market is feeling that this is not sustainable. They may not be able to generate sufficient cash flows to spend that money, so they may have to borrow money at higher interest rates, whatever the reason may be, which is why the stock is currently trading around $199. As you can see from this chart, in the last 1 year, Amazon has performed relatively underperformed the S&P 500, and it is down 13.71%. And you may be saying that why would I purchase Amazon when I can get better returns in some other stocks? And I'm going to show you the reasons why I still believe that Amazon has potential. Now, you may not get instant returns like you might get for meme stocks or YOLO stocks or TINA stocks, as they call it. But these are solid stocks, and when you invest, you have to think about the next 3 years, 5 years, and whether this company is going to be in existence in the next 20 years or 30 years. That's what we have to think about, rather than stocks that go up, 500% in one day, and the next day the entire value is wiped out. That is not what I do on my channel. So these are the statistics for Amazon. As you can see here, it's Amazon, and I'm just going to quickly discuss about this. Their profit margin has been about 11%, operating margin 11%, return on assets 7%. Their quarterly revenue growth has been 13%, and their earnings growth has been 5% year over year. They hold cash about $123 billion, and they have a total debt of $178 billion, which is really not that much more than the cash on hand. The other thing that is very interesting is that insiders still hold about 9.14%, and institutions hold about 67%. So as you can see, these are very good measures by any means. And any company that holds that amount of cash on its balance sheets with revenues growing quarterly 13.6% and earnings growing 5.9% doesn't mean that this is a flash in the pan. Now, what has actually happened is that due to market economics and Amazon spending more, projecting spending more in capex, the stock has gone down. However, the stock is still a solid stock, and I don't see any reason why I should panic sell and not hold this for the long term. In fact, if it does fall down another 30%, I will pick up some more. And if it falls down 50%, I will pick up some more. So I have basically allocated my capital to be invested in 3 or 4 types. I do not buy everything all together at the same time. I always buy it in 3 or 4 different times. That is not to say that I won't buy if the stock keeps going up. That is another strategy that I usually employ. And when I find that the market is going up because of the economic conditions and lower interest rates, and the market keeps going up, I might buy Amazon even if it is going up. So let's say today Amazon is at $199 and it goes to $210. I will buy at $210. If it goes to $220, I might buy at $220. And then if I find that in a month I'm getting about 15% return or 20% return, I might reduce my position. I won't completely come out of Amazon stock. I might sell off 50%, 70%, depending on market conditions. Now, you would have to do your own risk assessment. It's not like I can give a percentage and you would have to follow it. It all depends on your comfort level. And if you feel that you have researched the stock enough, and if you feel that the stock is going to go up, you can definitely keep holding it until you want to sell it at some point, because Although you may see profits in your account, you're not going to be able to enjoy the profit until unless you sell it. So my suggestion is always sell some, take the profits and wait or reinvest in another stock or wait for the market pullback to again get back in. It may so happen after you sold, the market went up more and you might feel that you lost out. Well, not really, because even if it keeps going up, there will be certain pullbacks a little bit, like you can see from 690 S&P 500 went from 696 to 680, which is about 16 points down. And these are very good levels to take small positions. I'm not suggesting that you should go all in at this level and become totally bullish. That is not what I am suggesting. What I am suggesting is to take small positions and slowly build up, because economic events and geopolitical uncertainties will tend to lower the market, or even it might go up. We don't know what the future holds. So my suggestion is to look at good quality stocks. Full disclosure, I did buy some good quality stocks on Friday, which is I bought Amazon, Google, AMD, a little bit of Tesla, and Microsoft. That's it for me for today. If you like my videos, please click on the like and subscribe button.